Good evening, everyone. Welcome back. This is Naveen Gorky Kamaraj from Mr.Kamaraj Arunachalam's Stock Market Trading Tips. So I'm very happy and glad to be with you today on this webinar on understanding the candlestick patterns and how we can use them for trading. Let's get started. So this video is for training purposes only and educational. Just go through them and build your knowledge base. Fine. So, as we all know, there are so many ways of doing technical analysis of market. So, let's focus on candlestick patterns and shapes today. So, candlestick charts are a technical tool that packs data from multiple time frame into single price bars. So, these candlestick patterns and shapes are favored because they are very simple and easy to analyze. So by seeing the candlesticks, you can easily identify whether the buyers or sellers are dominating the market. You can easily identify the highs and lows and open and close for the session. And you can also know the strength of the market. So candlesticks are a leading indicator and they're used to predict the future direction of price movement. Previously, we were seeing MACD. There we were not having any predictions. Today, we are going to see candlestick patterns, and here there is some prediction involved. Fine. I'm just showing you candlesticks because last week, the last webinar, we were checking out what are the candlesticks and how we can read them. I'm just showing this here. So a candlestick has a body, it has an open price, it has a close price, it has a high and low. And also we have upper and lower shadows or wicks. Then we have a middle body. So this is the base of the candlestick. Let's get started. Fine. Now, see, there are two types of candles. One is the bullish candle and the other is the bearish candle. Bullish candle is the one in green, which means the price opens and goes up and closes higher. That's called a bullish candle. And when the price opens high and comes down, we call it as a bearish candle. So for a bullish candle, the open is at the bottom. And for a bearish candle, the open is on the top. So similarly, you have the close also, which is vice versa. And for both these types of bullish and bearish candles, we have high at the top and low at the bottom. Okay, now, see, every day we are working with charts during trading. There are so many patterns and shapes. Actually, they help us to identify if the market is bullish or bearish, or if a trend is continuing, or if a trend is reversing, or if the market is indecisive. So these are the key things which, as a trader, we should be aware, whether the market is bullish or bearish, whether the current trend is continuing, or it's going to reverse, or if there is an indecisive situation in the market. So we need to know all these things as a trader. So candlestick charts, they help us to identify these. Actually, candlestick charts can be used as a single chart, a single candle, or a group of candles to form a pattern. Like it can be a single one or two or three or even more than three candlesticks together can form a pattern. Now, so I'm just saying a couple of candlesticks patterns here. We will be checking out spinning top, doji, long leg doji, Dragonfly Doji, Gravestone Doji, hammer, hanging man, inverted hammer, shooting star. These are all single candlesticks. There will be only one candlestick which will give some insight. Now, there are some more patterns like the bearish engulfing and the bullish engulfing. These are two candle patterns. And then we have the morning star and evening star. These are multiple candle, these are three stars, three candlesticks patterns. So we'll be checking out all these now. Fine. Now, let's begin with a doji. So what is a doji? See, as we know, a candlestick has four things: open, high, low, and close. What we call as doji is when the price of open and close are the same, we call it as a doji. See, for example, here there is a doji. It says that the price opened here, it went up, it went down, and then it closed here. This pattern, it conveys a struggle between the buyers and sellers. So there is no gain for that session. So this it indicates the market is uncertain at this particular session. So whenever we see a doji wherein the open and close are the same, we have two cases here where there is some up and down movement and there is no movement at all. We have both scenarios. So in both these cases, what we have to do is we have to wait for the next patterns or the next candles to come over and the other indicators so that we can take a decision. Based on a doji like this, no decision should be made. Okay. Now, we have something called as a long-legged doji. The one we saw previously, the wick was short. Here, the wick is too long. Again, it opened here, it went up and down, and it closed here. It was highly volatile. The price was highly volatile. So that's the meaning of this situation. For such a situation also, we have to wait. Do not take any action, just wait. Wait for the next candle or wait for the indicators to pop it. Okay. Next, we have something called as the Dragonfly Doji. Actually, this is an important doji. It looks like a T. The open and close are same, and then there is a long shadow on the bottom. Okay, what does this mean? Is there any significance about the color? See, this particular candlestick, the Dragonfly Doji, it has to be formed in the bottom of a downtrend. What it means is there is a possibility of reversal from bearish to bullish. This is the meaning of a Dragonfly Doji. So the Dragonfly Doji has to be formed at the bottom. It looks like a T. Again, you can wait for the next candle for the confirmation and then you can take the trade. Next, we have the Grainstone Doji, which is it's the reverse of the Dragonfly. If you see that, it's an inverse to T. It's an inverse to T, and usually this is it's forming on the top of an uptrend. And at that point, if we find a Gravestone Doji, it means there is a possibility of reversal. So what we have to do is the trend is going to change from bullish to bearish. There is a possibility. So we'll have to wait for the next candle. And once the next candle is bearish, we can enter and go for a short or sell. Okay, this is about the Gravestone Doji. Next, we have something called as the spinning top. This is a single candlestick pattern. What it does is, see, there is it's similar to a doji. However, there is the open and close are not exactly the same price. There is a little movement, and also we have a wick in the top and a wick in the bottom. So the wicks are almost of the same size, up and down. What it means is there is uncertainty in the market. I mean, at that particular time frame, there is uncertainty, and it's better not to take any decision. If you're holding a position, wait. Or if you're trying to enter a position, wait. Wait for the next candle, or you can check out the other indicators, and there are so many parameters which can be checked to take the decision. Based on a spinning top, you cannot take a decision because there is uncertainty. Now, we have something called as the hammer. See, this hammer, it has the shape of a hammer, like a hammer. See, there is a short body in the top with a long lower wick. Usually, it is found in the bottom of a downtrend, and just make sure that the body and the wicks are double the size. The wick should be double the size. See, it means whenever we have a hammer, it means that the trend is changing, it's reversing. So if you're holding or if you're trying to enter, this is a very good decision-making point where we know that, yes, there is going to be a reversal, and the decision can be taken based on the support and resistance if you know that, or just wait for the next candle and then you can take the trade. You can go for a buy call here. It's a bullish reversal. Whenever there's a hammer, It's a bullish reversal. All right. Now, we saw the hammer, which was like this. There was one more thing, which is called as the inverted hammer. It also means the same. That is, at the bottom of a downtrend, we have an inverted hammer, which also means there is a reversal possibility of bullish nature. So what we can do here is, again, check out the resistance, check out the support, and then you can take the trade, or you can wait for the next candle and then enter there and make a buy call. See, why we are talking about reversals here. See, for any trade, whether it's an intraday or a scalping or a swing or a long term, usually we want to get the maximum benefits. To get the maximum benefits, we have to enter at the right time. For example, there is an uptrend like this. If you want to make the maximum profit, you should enter as low as possible and sell as high as possible. To enter as low as possible, this hammer and inverted hammer, they tell, yes, there is a trend for reversal. Now wait, and you can enter the trade from the next candle or based on the support level. Okay, this is about the inverted hammer. Now let's get on to the next one. Fine. Sorry. Just a second. See, next we are going to see the hanging man, which is like from this picture, you can see that on an uptrend, you get this symbol. Okay, this is called as a hanging man, and it comes only during the uptrend. Whatever happens with this hanging man, it happens only on the uptrend. It means there is a possibility for reversal to the downtrend or the bearish nature. Fine. If you notice here, it also looks like a hammer, but I'm calling it a hanging man. Why? The reason is, see, the hammer and inverted hammer, these two are counted only when they are coming in a downtrend in the bottom. If there is an uptrend and we find a hanging man, it is not a hammer. It is a hanging man, and we have an opportunity for reversal towards the downtrend. Make sure that the body and the wick is at least 2 times the size of the body. So this is very important, and the color doesn't make any big difference over here. Just be aware that on an uptrend, if you get a hanging man signal, it means that candle, it means that there is a possibility for reversal to the bearish trend. So how we can do this? See, we are talking about support and resistance. How do you identify the support and resistance? I'll just give you an overview. See, support, just for example, you are seeing a 10 minutes chart. On your screen, you are seeing a short period, but just reduce the size and you can see the previous candlesticks for the previous couple of hours or whatever. You can see that, and you can see that at one place it went down, and at one place it went up. So these form the base for the support and resistance, basically. So if you know this support and resistance by drawing the trend lines, or you have a pivot, whatever, you know the support and resistance. Based on that, you can enter here itself, at the end of this candle itself, or better, wait for the next candle for confirmation, and at the end of this candle, you can enter as a sell trade. Next. Yeah, we have the shooting star. What is a shooting star? It's like the inverted hammer, but it is formed at the top of an uptrend. So this also means there is a possibility of a downtrend which is going to follow. So hanging man and shooting star on the top of a uptrend, it means there is a possibility for reversal. And hammer and inverted hammer at the bottom of a downtrend, it means there is a possibility for reversal to the bullish segment. So how do you make it? How do you confirm this? Wait for the next candle or check out the support and resistance levels. And again, make sure that the wick size is at least double the size of the body. This is very important, otherwise you'll get confused, and it should happen on the top for a shooting star. Okay. Now, so far we have been seeing about single candlesticks based interpretation. Now let's see two candlesticks based patterns. So what happens here is we have bullish engulfing is basically, it's a two candlesticks pattern. Okay, there are two candles, in this case engulfing. There is one small candle and there is a bigger candle which just engulfs. It just engulfs the other candle in the opposite direction, which means the trend has reversed. So, and make sure that you don't count the wicks. The wicks are not important here. The bullish engulfing is a reversal candlestick. It gives us the information that there is a reversal possible, and always this happens on the bottom of a downtrend. See, make sure that the wicks are discarded and the open and close of the small is totally engulfed by the bigger candle, the green one in this case, for the bullish engulfing. All right. So here also you can wait for one more candle to make the confirmation, and then you can take the trade. There's one point. See, if this red candle is a doji and we are getting a engulfed, we are being engulfed, it means the signal is very strong here for a buy. Okay, and also if you wait for the next candle and it closes more higher than this green, the bigger candle, it means the signal is very strong for buy. Okay, so next we will see the bearish engulfing. Similar to the bullish engulfing, there is also a bearish engulfing which happens on the top of a uptrend. So what it means, there is you can see here there is a green which is a bullish candle. This bullish candle is completely engulfed. If you see the wicks here, other than the wicks, the body is totally engulfing. This means the trend has reversed. The buyers have been taken over by sellers. So the sellers are huge in quantity and now they are dominating. That's the meaning of this, which means there is a potential reversal from the bullish trend to the bearish trend. This is called bearish engulfing. We saw bullish engulfing and bearish engulfing. Always remember, these reversals are key to take decisions for holding the trade or exiting the trade or entering the trade. When we have a look at the charts, we should be able to get a clear idea of what are the possibilities. Okay, the next one, which will be again a two candlesticks, which is called as the bullish piercing. This is actually like, if you see here, see there is a bullish piercing on a downtrend. When there is another candle which crosses more than the half, which is a bullish candle, and it crosses more than this half of the previous candle, which means there is a pierced way of reversal. So this gives us an insight that there is a strong buyer trend at this time, and definitely we will wait for the next candle or the support or the support over there. Then we can take the trade. So the buying pressure has increased here. So the market has changed from the bearish to the bullish. Okay. Okay, now we will go on to the three candles based patterns. But here we see that there is something called as a morning star. It's actually three candlesticks. So it also forms in the bottom of a downtrend. Morning star, as it means, it's like sunrise. That means it's positive, which means that there is a huge, there is a big bearish candle, and then you have a small candle below that. Then finally you have a bullish candle. If this happens, it clearly means that there is a trend reversal. So morning stars, they don't happen very often, but when they happen, they are a solid standard confirmation, and you can take the trade actually. If for example, in this case, this green is smaller, But suppose if it engulfs, I mean, if it goes beyond this, it means the buying pressure is huge, and there is a strong buying pressure on this. Okay, so morning star, which means there is a reversal with a strong uptrend. Okay, next we'll see the evening star, which is similar to the morning star, but it is for the downtrend. So what happens is basically you have three candles here also. You see there is a big bullish candle, and then you have a small bullish candle on the top, and then you have a larger bearish candle. When you see such a pattern, it clearly means the trend is reversing. So you can take the trade here itself, or you can wait for the next candle and take the trade. So these are very solid. Morning star and evening star are very solid candlestick patterns that guide us whenever there is a reversal. Okay, fine. Now, I want to tell you this. So far, we have seen a lot of different types of candles: single, 2, 3. For example, I've just categorized them together. Like we have them for reversals and indecisive situations. So for bullish reversals, we have the hammer, the inverted hammer, the Dragonfly Doji, the Bullish Engulfing, and the Morning Star. And for bearish reversal, we have the Hanging Man, the Shooting Star. All these happen on the top. The Grainstone Doji, the Bearish Engulfing, the Evening Star. Then indecisive. So we have the spinning top, we have the doji, we have the long leg doji. So whenever we see these three types of indecisive dojis, we have to wait. We are not going to do anything. No action will be taken. If you're holding, wait. If you're not going to, if you want to entry, wait. Now, talking about the bullish reversal and bearish reversal, we know that as the trend is going on, when we see these candlestick patterns, it clearly tells us that there is an opportunity for reversal. So now we have to see the support and the resistance level, or you have to wait for the next candle for confirmation, and then you can take the trade. Okay. Yeah. Now, see, what I'm saying is, don't just stick to the candlestick. Wait for, if you don't just stick to one candlestick, wait for the confirmation. That's very important. Or you can wait for more indicators like Fibonacci retracement or other ADX or RSI or super trend or whatever. And you have to be very sure. Okay, fine. Get the confirmation and then trade. Okay. I'll just show you some of yeah. You see here. Is it clear for you? Fine. See, I will show you some I saw this. Yeah. Every day we see candlesticks like this every day. So what do they mean? See, we have a, what do you call this? Shooting star. This is a shooting star, right? There is an uptrend, and then we have the shooting star. It clearly tells us that the price is going to reverse, and that's what happened. This is, I'm showing you gold live from Alice Blue for yesterday. And if you see here, this is a spinning top. So there is no clear direction of what's going to happen. So we should not take any decisions over here. And this is again a spinning top. And likewise, you can see a lot of each of these candlesticks. They all convey us a meaning now, because previously we were not aware of how to read these candlesticks. Now you understand what's going on. You see this here? This is an inverted hammer. It happened at the end of, almost at the end of a downtrend. We got an inverted hammer. Yes, it went up. And before that, if you see, this is a long leg doji, and there is a spinning star. See, the price was coming down from here. Okay. At this point, there is a lot of indecisiveness. You can see that you have spinning stars, and it's just waiting. So here you get, fine, you get the inverted hammer. and then you wait for this confirmation and you can enter here, which means you will get this profit. Okay. All right. Okay, now I'll show you for Morning Star. I'm just looking for it. I cannot, because Morning Stars are not easy to find. They come very rarely. Okay, fine. I'll show you this later. Now, this is the way you can understand how to interpret the candlesticks. And now you know better than just looking at the charts. Now you have a better insight of what is actually happening, and you can take the decisions accordingly to hold or to enter or to wait. Okay. And that's it about the candlesticks. I just wanted to show you this and explain when to hold, and when there is a reversal, you should be aware of it, whether to hold or enter or whatever. Now, we will get on to the next part of today's webinar, which is going to see. Every day we are getting a lot of discussions on people who are asking what are the strategies and how they can, because we have seen people coming into trade and then suddenly they vanish because they have lost the money, or they don't know what to do, or the money is not enough for them, or whatever the profit they're making is not enough for them. All these things happen to anyone. See, these are based on Mr. Kamaraj and myself and many other successful traders who have been able to be in the trading business for a prolonged period of time and make money, of course. See, first strategy is do not keep all your money for intraday trading and just trade intraday. No, that's not the way. Invest your money in stocks that for a long term, then you get some free cash or the collateral, you can see. And also, once, for example, say you are investing, say 100,000 or 1 lakh, you can day trade up to 15,000 rupees. This gives a lot of confidence, because if you're having 15,000 rupees with you, or say 1 lakh with you, if you're having 1 lakh with you, and if you're trading all that money, 1 lakh on the intraday or swing or scalping, there is a huge risk involved. But instead of that, you buy this 1 lakh, you use this 1 lakh and buy some good shares, and you keep it in your holdings. So when you do this, you are confident, yes, fine, this share is good enough. Yeah, of course, we'll be telling you tips of which shares to buy and when to buy. So you can buy that. So when you hold some shares, you have some asset. It's an asset for you, which is more power and more, you're getting more confident and you are strong. So what happens is, if your asset in the stocks is 100,000 or 1 lakh, and you're going to trade with only 15,000 rupees, which is like 15%. I'm just giving an example of 15%. So for 15,000 rupees, you can trade, say, up to 3 lakhs for equity, or you can trade 3 lots of crude, or you can trade more than, say, 10 lots of silver. This is more than enough to make money. See, like with 3 lots of crude, definitely you can make. It's not going to be just one trade. On a day, it's going to be 1 to maximum, example, 1 to 3 trades. So you can make definitely 5,000 rupees if you're going to trade at the right time, by entering at the right time, adjusting the stop loss, and exiting with minimal profit rather than closing at loss. When you're doing such a way, even if suppose one of the trades you are losing the money, for example, you did some trade and you lost 3,000 rupees. Okay. Your capital is 100,000 and it's there, and you're trading with only 15,000, and in this 15,000 rupees, you lost some 3,000 in one trade. It's okay, fine. Is it your goal? Stop trading for the day. If it's not for you, if it's less than your goal, you can trade more and you can recover it back. See, this gives you more strength and power. Okay, so invest in stocks for a long term, and do intraday trading with only up to 15% of your invested money. So this will give you more confidence and strength. This is first strategy. Next one, we have been telling this for ages. Always fix your daily goal for profit or loss. For example, 5,000 rupees profit you want, or 3,000 rupees loss. So this will be a goal. And once one of these is reached, stop trading for the day. If it has not reached, for this is the way, like safe traders, they can be fine, because one day you're losing money, fine. The next day definitely you'll make money. The next day you'll make money. One day you're losing. This is possible because as new traders or as safe traders, you have a lot of fear. Of course, not only fear, greed, everything is there. So these will pull you down. For this situation, emotional trading will be disaster. So fix your goals and stick to that. This will ensure that your capital is safe. And if you're going to lose today 3,000 and tomorrow you're going to make 5,000, of course you're going to make this money there. So do not overtrade and lose your money. This is for safe traders. And there is one more category of traders. I've seen many of you. Like these people, they want more profit and they're ready to take more risk. So what we suggest to these over enthusiastic and these are aggressive traders, what we suggest to them is, first you do some trades, make your profit. Okay. Once you make a profit, you can take risk on that profit money, which means even if you're going to lose, you will lose only the capital. I mean, you lose only this profit. Your capital is safe. You get my point? For example, you do some trades and you make some, say, for example, 5,000 rupees profit you made. Now, this is your goal and you're not a safe trader, you're an aggressive trader. So now what you will do is, you have 5,000 extra today, which is not your capital. So this 5,000, you can trade more. Keeping this in mind, you can trade more and you can be more aggressive of multiplying money this way. If something happens also, you are not going to lose your capital and still you are going to play only with this profit you made for the day. So this is one more strategy wherein you can multiply money with a calculated risks on the profit. Okay. Now, every day we are getting these questions also. For example, how to make money. See, you buy, say, 500 shares of equity or say one lot of whatever commodity or futures or options. That's not the way. If you buy just one single lot or say few hundred shares, you will wait to get the maximum profit because you have a goal in your mind and you will wait for this maximum profit. But what happens is market is not the same. There is a huge volatility. That's the reason we say adjust the stop loss, adjust the stop loss, adjust the stop loss when the price moves to the target. So what we suggest here is trade high quantities. I think I showed you how some trades were done with high quantities. For example, you're going to trade 5 lots of crude oil. Okay, once the price reaches certain level, close the first one or adjust the stop loss towards the target. Now wait for when the price moves, you can adjust the stop loss and you can close the positions with partial profit, nothing wrong, or adjust the stop loss. So what happens here is, on an average, you're making money. Make a calculation of how much you need to pay for the brokerage and charges. Then accordingly, you keep it in your mind. Okay, this is the minimum level and whatever comes more is plus, because it's not just one trade in a day. There are so many opportunities and closing each trade in profit will be the best way. Okay, so go for multiple lots or more quantity and close them as you get profit. This will ensure that you're quite safe. I think some of our people, they were able to do it and they're quite successful. Entry at the right time, adjusting the stop loss, these are very important. Okay, to be successful, entry at the right time and adjusting the stop loss at the price moves towards the target. So these are the crucial things if you are trading high quantities to be successful. Now, always don't keep all the eggs in one basket. Even Warren Buffett, he's used to say this one. So that's what we also say. Don't take risk on one particular trade. Split your capital to multiple trades. And you can, for example, if you're splitting to 3 trades, your risks are divided to 33%. And also, you will have a peace of mind. Because if your whole money is invested, traded, you will be in full stress and that's not going to help. Okay, so split it into three and you can trade. First trade, you can do it, take the profit or loss, whatever, face it, and go for the next trade with the next portion of the capital. This way, we ensure that there is a continuity of trades and the risk factor is minimized. Okay, these are the best practices that I wanted to tell you guys so that you can also make money in a comfortable way. So we'll have a couple of webinars in the coming weeks. I just mentioned them over here. So tomorrow morning we are having a webinar on RSI indicator and what are the trading strategies we can use to trade RSI indicator. And the week after that we'll be having understanding ADX, how to use it. And then the day after that we'll be having how commodities, what is commodities? Commodities futures is there, commodities options is there. What is this? There are so many things, so many questions. So we'll have a webinar on this, understanding what are commodities and how we can trade them and the best way to trade them with different strategies. Now, I've been talking about Fibonacci series. So what is Fibonacci is very important for a trader. You should know what is Fibonacci series and how to do the retracement. And there are so many factors in the stock market that is affected by Fibonacci series, which we need to know. So we'll talk about that the week after that. And also we have this average true range, the super trend. There are so many things which we also be learning the week after that. So in the coming weeks, we will have continuous webinars every Saturdays at 5 p.m. and Sunday mornings at 10 a.m. Please ensure you are available so that you can always get to know the best practices and the latest stuff. Okay, I think that's it for the day. I want you guys to please ask me any questions you have and I'll get back to you now. Any questions, please, you can ask in the Q&A session. I will get back to you. All right. I guess nobody's having questions today. That's very good. So many people are here and no questions. Okay, I got some. Sometime bearish candle, but move fast, bullish trend. What to do? This is why we say two things. First of all, stick to the logic of confirmation. Wait for the next candle and then take the trade. If there is a bearish trend, but it moves fast and then it becomes bullish trend. So what to do? You have to be very careful here by taking the confirmation and then entering the trade. And then if you have made a sell, you have to adjust the stop loss so that when there is a reversal, you still make profit. You want me to show the morning star? Yes, I'll show you. Sir, as you said, to trade in higher quantities and in multiple lots, in that case, if SL hit, then loss will be more, isn't it? Yeah, that's a good question. Yes. Most of the times, I can say most of the times, once we enter, the price moves up towards the target or down towards the target and then only reverses. There is very rare cases when there is an entry and then it moves towards stop loss. No, it's very, 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 very rare. Very rarely we get this scenario. Most of the times it moves towards the target, but it doesn't reach the target. And then it reverses. What happens is, for example, you enter here and you're supposed to go here for the target. It just goes halfway and then reverses and goes down, hits the stop loss, and then again it goes up and crosses the target. It has happened many times. So that's the reason we say always keep your stop loss and adjust it towards the targets. And if you're trading in multiple quantities, what we say is close partial. Close the first one, which is the huge, the highest quantity, you close it first. Then you wait. If there are multiple orders, you can wait, and then close it. Okay. Directly stop loss hitting is very, very, very rare. There is always a movement towards the target and then only there is a reversal. And even many of the times it goes down and hits the stop loss and then it moves to targets. The reason is we talk about Fibonacci. So that's one reason why you do this. Okay. Yeah. See, I will send you this. The question is exact top or exact bottom is needed for these reversal. This is the question. We don't know. See, when the price moves like this, we don't know if that is the top. And when the price goes down, we don't know if that is the bottom. But when you see these candle pattern for reversals, it means yes, there is a possibility for reversal. We don't know at that time that this is the absolute bottom or this is the absolute top. But when we get the pattern for reversal, yes, here there is a chance for reversal. I have one question here. I have lost money. Can I recover? See, for the newcomers here who have lost money, please follow the rules. There are thousands of ways to recover money and make huge money. It's not hundreds. I'm talking about thousands. There are thousands of ways to make money each day. Trading is one of the best disciplined way where you can make money. As I said, disciplined is the right way to recover money. We can chat about this later, and I'll give you guidelines. This is for the newcomers, so that the new traders or people who have lost money and they want a way, they want somehow to recover the loss. So for these people, there are thousands of ways to recover money. Keep this in mind and don't lose hope. Follow the best practices. We have been telling you this again and again and again. Watch our videos and trainings, and you're welcome to ask any questions to us. We'll be more than happy to guide you with the best practices. Tell us your problems and what you have done. We will guide you definitely to recover. And I have a question. Shall we wait for the execution message from your side or trade when it hits by yourself? No need to wait for the execution message. See, when the tip is given, you can place a bracket order. Sell below or buy above. Whatever is the price, you can place a bracket order. Then you wait. The execution message is just a notification. It has no significance. Okay. Whenever the tip is given, you can enter by placing a bracket order. Yesterday, copper executed but moved bearish to then again bullish, then again return target. That time, stop loss extended or not. See, this is what I think. Sometimes what happens is towards the target it moves and then it comes down and then again it moves towards target. So it hits and then comes up. So in such cases, you are welcome to ask us. We will tell you to adjust the stop loss to the next support level or the next resistance level. We'll tell you, no issues. We'll be able to tell you to adjust the stop loss based on the current situation accordingly. Okay, you are right. As soon as we enter first, it moves towards the target. So in that case, especially in Nifty and Bank Nifty, can we trade with multiple lots, say 20 and 30? Nothing wrong. You can trade with whatever. It's up to you. Trade more and exit with minimal profit. This is the idea. So you want to make 5,000. What is wrong if you're trading with, say, one share or say 1,000 quantity and making 5 rupees out of it, and you are doing a little brokerage, or you're going to trade 5 lots of crude and you're making the same money, and you're going to spend, say, like 70 rupees for brokerage. It's all the same. You have to make a little more, and you can manage this very easily. See, what I'm saying is, trade multiple quantities. It's called as calculated risk. It's based on your capital, and you can definitely make profit. Instead of, for example, Nifty Bank Nifty, for Nifty, so the target given is say 40 points. Why should you wait for 40 points? Trade multiple quantities, say like 5 lots or 10 lots or 50 lots. That's okay. Trade multiple lots. Exit at 15 points or 10 points or 15 points is good enough. You still make a lot of money out of it. Okay. Again, be very calculative. This is called calculated risk. You should know how much is your expenses, brokerage, tax. There are charges from city. There are so many stuff. You should know how much is that. Then accordingly, you can trade multiple lots and exit at minimum profit. Instead of, for example, crude, sometimes it goes to like 40 points. Your daily goal is like, say, 5,000 rupees. And you trade 10 lots. So would you like to wait for 10 lots into 40,000 rupees? Yes, you can wait, but adjust the stop loss and wait. At least you get the minimal profit if it reverses. Not all trades are going to give you huge profits. Minimal profit is good enough. Take the next trade. That's enough. Okay. So you can trade with multiple lots. Okay. The next question. Option trading in morning is good. Of course, option trading is good. You should know the strike price and you should know exactly what is the range to be traded today. Yeah, of course, you would have seen about our training sessions on options. We have been giving trainings in options to so many people over here. And we have been telling them how to select the strike prices, how they can enter, and how they can win. They should exit. All these are given. Option trading can be done at any time based on, because see, there is market volatility. Thursdays, there is a huge volatility because on these days, outside the range they're all gone. Whatever is within the range, you get the profit because it's a bullish, bearish, or neutral. You can get to know. See, there we are giving exclusive training of options trading, which is like a consolidated summary of our experience and knowledge from Mr. Kamaraj and myself, which is a very consolidated summary, which will give you clear-cut way of how to trade in options. So on Thursdays, you have to be very careful because these days it's the closing day. On other days, yes, you can trade in the morning or afternoon. It's okay. It doesn't make any difference. Whenever there's a possibility for entry, we tell you. Okay. Next question is, which time is best for trading in commodities? I think evening is good because once all the Europe and US markets are open, there is a lot of movement. So you should be aware of when the markets open, and you should be cautious as well because sometimes when the market opens, there are spikes. So I think that's it. See, I will send you this Morningstar screenshot by WhatsApp in the link because I don't have it here now. I'll send you. I have it somewhere. I'll send you now. You can check it out yourself. I'll send you a link maybe after this session is over. And I've taken so much time today. Fine. Any other questions related to this? Today's session about the candlesticks and the best practices to trade. See, there are times when you send tips of same commodity with different figures. Which tip should we pick? Well, see, I think you're confused about gold and gold M. See, there are two different tips. Gold is different. Gold M is different. Gold M is only 10 rupees per point. Gold is 100 rupees per point. You need more capital also. So please be more careful about which script you are seeing, and so that you should be very careful. On all the tips, that is a future, we mentioned FUT, for example, AUG, FUT, if it has, it's an August future. For example, I'll say Reliance. Reliance, if it's just Reliance, it is equity. If it's Reliance, AUG, FUT, it is Reliance future. And if it has P or CE in it, it's an option. Okay? I think that's it. Any more questions, I'll be available on WhatsApp. You can reach me out. I'll explain it to you. We are running out of time. Thank you, everyone. So it was really nice to have you all today. And thanks a lot for being with us. And we had a lot of good things to discuss and review today about the candlestick patterns and the best practices for reviewing your trading habits. So I really thank you all for being with me today, and have a great evening. Good night and goodbye.